Let's bring in Robin Cross from StoneX. Thanks for joining the show on this Thursday. I almost said Thursday morning. Wow, what's my mind thinking? Robin, thanks for being on. What do you got for us here?
Hey, Scott. Good morning, buddy. Well, first things first, let's go over the prices. We got September lumber today opening up $554 even. That's down $120. I would call that pretty steady on the day, but already 74 trades, so that's kind of a lot of trades for our first 19 minutes. November, no trades as of yet, but as I told the listeners last week, we're in the process of sunsetting this contract for the new one, so the deferred months have been slower than normal, if you could believe that one. Well, Scott, as I was putting together today's piece, I had a difficult time finding any bullish sentiment for lumber and housing, right? For the last week, negative fundamental news continues to pour into this market. First, it all began with mortgage applications. First, they were down to a 22-year low. Then we had a good indicator that most lumber traders watch is housing starts and building permits. Both posted lower than expected numbers, albeit they were just slightly lower, but you got to remember it's way in the rear. So I think the upcoming data set will reflect the current state of the housing much better than this one has. And then we also had existing home sales come out this week, down 5.4% to a seasonally adjusted rate of around 5.1 million. But what's shocking about that, it's down 14.2% year over year. Unsold inventory still sits around 3 months supply. The medium existing home price, and get this, Scott, it's up 13.4% from year over year, and that was at $416,000. And then we also had new home sales come out this week. That came out down 8.1% to $590,000. The consensus on that was around 660,000. So the new home supply was also up from about 6 months to 9 months. So that's pretty good. That's the most we've seen in about 3 years. So, there at least is some inventory. And if that wasn't all bad enough, as of which being a trader, as we officially entered into the Biden era recession, right? As U.S. GDP falling for the second straight quarter. So that pretty much tells you everything you have to know. But I like to tell both sides of the story. And, I think a lot of this negative news has already been in the market. I mean, if you remember, March, we were at a 1,400 high. We fell all the way down to 829, right? Then for April, we bounced up to 1,052. But since then, we've been straight down. We went from 1,052 down to 531. So that was a loss of about 521 points, or around, let me do the math, about 57,000 a car. So I could see a short covering bounce from here. I mean, it's really, at these levels, I don't really see any new outside selling kind of coming in the market. It will if the market continues to stay weak out there, but I do expect some sort of a little bounce for the summer. We usually have a seasonal rally last week of July, first week of August, so I still believe that's going to happen. But any rally that would come from a seasonal bounce, I would definitely look to sell into technical resistance. And I have that technical resistance around 640 to 660, and I think guys should definitely be careful. And as I say, with this contract being sunsetted, you almost have to wait for a mistake, and it's really down to the bona fide hedgers. Speculation is the engine that drives this market, and I'm not going to see that until we turn the new switch on the new one on August 8th.
All right. Great content. Really appreciate you coming on. Robin Cross from StoneX. He's the lumber guy. Thank you very much for taking the time on this busy Thursday morning. We're going to go away. We're going to pay some bills. We're going to come back and talk more livestock with me after these messages.